Hi, welcome to the review of round two for the Zoom simulation. So just want to see what's happening here. So we see this is net profits per team, and you see that net profits went up from, we had about an average of around 40 to 45 million. Now we're between 65 to 75 million with two teams here above 75 million, which is an incredible amount of net profits for the second round. Now there are a few teams here that are underperforming in net profits, and what they should do is review on the industry page what the top teams are doing and try to get some inside information on what teams did last round that propelled them so high in the profit margin. So if you see here, I have Omni and Farah and RA and Cardio. I'm not saying that right, but these companies, along with Fox and Power and Ghost, these all did extremely well in their net profits. So they lived up to what shareholders wanted from their CFOs. They wanted CFOs and CEOs to maximize shareholder profits, maximize owners' wealth, and you do that by increasing net profits. And that translated into these teams having some of the highest points. Now, a couple teams here. So if we look at, Power Motors, we'd have to look at them more specifically. But they did very well in round one, and they struggled a little bit in their points in round two, which might have been an unexpected deficit. So when you make close to 1,000 points in round one, you're competing against yourself year over year as well as the other classmates. So sometimes that's why your points might be a little bit lower in year two, or you might have just had an unexpected deficit, which takes 200 points away from you. And then vice versa, if you did poorly in round one, you're competing off for year over year results, so it's easier to do better in round two and make up the difference. But by and large, what you're trying to do is average about 400 points a round to get to the minimum score needed to get the full points for the simulation. Okay, moving forward to stock price, we have Ghost Motors number one in stock price, followed by RA Motors and Omni Motors. And you see that these are the companies that, these are three companies, though, that are in the top six companies as far as profits. So profits generally, net profits do excite investors and push stock prices higher, which is maximizing shareholders' wealth for a public company. Okay, if we look at sales per share, we still have Fox Motors number one in sales, followed closely by Roman and a couple of sneaky ones in Ghost and Farah, and not sure how to pronounce that. I don't want to butcher that. So these are all companies, many companies above, all these companies here are above 300,000 in sales. So all doing fantastic. This company down here should review the user guide and look at their forecasting and sales section a little bit more closely because they're far behind most of the other teams. This team had a really nice increase in sales year over year, as did this team. Okay, earnings per share, we have Ghost Motors rocketed into number one in earnings per share. Last week's earnings number one was RA Motors, which is now number fourth in earnings per share. So we see the top net profit companies typically have the best earnings per share. Ghost Motors, they may have bought back some stock, and that helps your earnings per share as well. Helps all your per share variables when you buy back stock. The market share is anywhere from a low of 4,000 cars to a high of, let's see, 10,700 might be the highest amount of cars. So that's a pretty big range between market share of units sold. There's a lot of companies competing here. So if we look at the overall leaderboard, we see that, yes, the top teams here in points for the round, this is the current round points. Now, you want to kind of average your points as you go along. So if you look at your total points, just scroll down here, total points. If you look at your total points and divide by 2, anybody who is above 800, which is just about everybody, is pretty much close to 800, everybody's on track to get the full grade in the simulation. So as long as you're around averaging close to 400 around, you're going to be doing well. And some teams here are way over the 400 around and going to do on track to do very well in the simulation as far as total points. Now, if we look at, let's see what's next here. Gross profit margins are very important. So if you're not increasing your gross profit margins, you're failing as a leader of the company. So we all started at 40%. So only one company, this explains this company's poor performance, they actually went backwards. They started at 40% and now they're at 36. So they let their profit margins decline. Investors hate that. Look at the current news. Anytime news comes out in the company where their profit margins have gone down, the stock gets decimated. Now, if you started at 40%, and I'm saying try to elevate your profit margins 4 or 5% each round, you should be at 50 or higher. So anybody who's 49, 50, 52, you're in the right area of where I'm suggesting. If you're 48, 47 is not bad, but if you're 46 or below, you're increasing your net profits too slowly. You really need to make some strategic moves to figure out how to increase your net profits. And strategically, it's not too difficult. You lower costs or increase prices. That's the strategy. Okay, as far as stock price, we talked about that earlier. Return on equity, as your company develops more equity, means you're growing the company's value through the stock price, and you're decreasing your debt, your equity values are going to grow. And the return on equity may suffer if your equity grows faster than your profits. But it's not necessarily always a bad thing. We talked about total points. Operating profit margins here, what you can control mostly is the amount of advertising. So if you're over advertising, it may be destroying a lot of your operation profit margins. So make sure you compare yourself to other team members, other companies rather, and make sure that you're not outspending many of the competitors, and because you may outspend, but you may not get a return on that investment. Because there's a point where over advertising develops less returns. Earnings per share is simply your net profits divided by your outstanding shares. So you can increase this by increasing your net profits or buying back stock and decreasing your earnings per share. Return on assets is how effectively you use your assets. So if you're buying production plants, make sure your capacity utilization is high, that you're not buying a production plant and building 4 cars a year in the production plant. Make sure you use the full 1,000 cars that you can build in that plant if you can sell them. Okay, net profit margins is after your taxes and interest. The only way to really influence this is to pay down your debt and lower your interest payments. Or also, if the more profits you have gross that translate into operations, that eventually trickles down to net profits. So the bigger your starting point, the more money can trickle down to net profits. And this is what investors get excited about because this is the money that really belongs to them. Okay, sales or revenues. Being number one in revenues doesn't mean you're number one company. It just means you're selling a lot. I could be a number one car company too. I'll just price my cars at 5,000 a piece, and I'll sell everybody. The demand for my cars will corner the market, but I'll be making a $15,000 loss per vehicle. So you want to have growing sales, but only growing sales with a growing profit margin. Total asset turnover looks at your assets in relationship to your sales. So you don't want to have assets that aren't contributing to the growth of your sales, or your profits. So it's really that you want to utilize your factories and utilize your operational investments to really help sell more cars. And your assets to your sales are what we're looking at here. Okay. All right. So that is the leaderboard. Now we're moving into year 3. So remember, when you're moving into year 3, this is our next round, you want to see what your past round decisions are. Notice that the expectations have increased, so you have to redesign your car. Hopefully your operational cost reductions have increased. So here for, say, economy class, I was only able to get to 45% gross profit margin, but I put a lot of money in my operational reductions. So now I can build a better car. So let me build a better car here. and I can get a higher profit margin because I made these operational cost reductions. And that's going to be very helpful. And then I have to figure out what my sales will be, and I can use the manual for that. So that's basically what you want to do. You want to build a better car and have a better profit margin, and that's what your goal is every round. Then you want to go into your marketing and review your marketing and see that you see the marketing level has grown, so you're going to have to increase your overall investments in marketing, because as the competition and the sales grow, so does the amount people are allocating towards marketing. And as you go into production, you want to make sure that um, you're increasing your operational investments, and you want to make sure, do we have any unsold inventory? So I have anything current inventory was unsold. So I had this unsold inventory that I can resell this round, but this took a drag. It created these assets that weren't sold. And that's one of the reasons that if you have a lower total asset turnover or return on assets, it might be because your inventory is too big, and you get a big inventory when you have unsold vehicles. Um, and you can see that in my overview. If you look at my return on assets went down because I grew my assets too fast, and I had unsold vehicles that bloated my assets. And if you look at total asset turnover, you'll see that my total asset turnover went down because I generated assets quicker. I built my assets up faster than I built up my sales. So in production, I just have to really watch my forecasting better. And then finally, in finance, you'll see if can you retire some funds. You may still have to borrow some funds to make sure you don't have an unexpected deficit. So I had this unexpected deficit because of all those unsold vehicles. So in my overview for last round, I had this deficit that cost me 100 points, which I could have, been at, instead of 254, this would have been 454 if I didn't have this unexpected deficit. So one way to prevent that is try to have at least a surplus when you're done. If you've done everything properly in the first module, in the first four, sales, marketing, production, on your surplus, make sure your surplus is greater than 20 million, just to cushion any unsold vehicles. Okay. Okay, so that's my advice for completing round 3 and review of round 2. I hope you found this helpful, and good luck this Thursday when you complete round 3, and I'll be talking to you soon.